We are very close, in my mind, to officially kicking off a bull market. The Clarity Act passing, that is the fourth major regulatory unlock for Bitcoin in the last 3 years, and chances are it's going to be massive for Bitcoin's price. Every single time there has been some sort of regulatory hurdle that's been cleared for Bitcoin in the United States, we've seen a monster rally. Once it's classified as a commodity, all bets are off. The US needs stablecoins. Stablecoins are the biggest on-ramp for Bitcoin. STRC, the ones who are saying that this is a Ponzi scheme, are very wrong. This $300 trillion global market can port into an asset that is only $1.6 trillion. It's a major component of why Bitcoin has managed to move off the lows, in my mind. When Kevin Warsh gets in, he's going to cut rates regardless of this inflation. There will be huge value destruction. Bitcoin stands to do extremely well in this environment.
Hello everybody, welcome back to the Bitcoin News channel. If you'd like to see this channel grow, please share this video with one person you think would gain value from it. Today I am joined by Joe Consorti. We do a deep dive into why he thinks the Clarity Act will be the biggest regulatory unlock in Bitcoin's history and how it will kick off a global accumulation race for Bitcoin on the sovereign level. Next, we go into the Strait of Hormuz, how it could send oil to over $200 a barrel, and how Wall Street is asleep at the wheel despite a giant inflationary crisis brewing underneath the surface. Finally, we look into AI, how it's creating the largest productivity boom in history, how governments will be forced to print in the face of it, and why Bitcoin will be the biggest beneficiary of it all. All right, Joe, welcome back to the Bitcoin News channel. How are you doing?
Doing good, Rob. Good to chat with you today, man.
Yeah, absolutely. Monumental times it feels as if we are living in, but Wall Street seems to be sleepwalking into the fact that we are facing monumental Bitcoin regulation, an energy shock, and AI possibly upending the labor market as we know it. Why is the world so complicit at this moment?
Yeah, it's a really good way of framing it up. I think it's the fact that the politicians want to enrich themselves. The Federal Reserve doesn't really care about people. It just cares about extracting value from people to benefit asset holders at the expense of those who don't own assets. It's just the same story time and again. So the macro environment we're experiencing now, it's different, but the playbook is the same. You see it clear as day. The S&P 500 just hit, 7,500 points for the first time ever? I could be misspeaking. It's going to hit 10,000 within the next couple of years, I'm sure of it. Yet consumer sentiment is at an all-time low. Credit card delinquencies are at an all-time high, or highest since 2007, which tells you all you need to know. The number of people who report living paycheck to paycheck is the highest since 2007. So the bifurcation in the K-shaped economy that you've talked about before, that I know... infra is talking about relentlessly. It's only widening. It's only accelerating, and it's accelerating because of the math that the Federal Reserve and the U.S. Treasury are facing, but also the structural forces in the macro environment that are also creating a little bit more inflation. So we'll get into all of it today, and I'm really excited to chat about it.
Yeah, so we got to start off with the news of the day, of the hour. The Clarity Act has just passed out of committee and heads to the Senate floor. We've had lots of legislation over the last couple of years in Bitcoin, whether it's the ETFs or, of course, the Genius Act. But you say that this is a much larger in terms of the implications. So why is this such a big deal compared to the rest?
For sure. I mean, it's a massive deal. First and foremost, there is no formal legislation around what not to do as far as Bitcoin and stablecoins are concerned in the United States. Of course, crypto more broadly, but the show's called Bitcoin News. I'm a Bitcoiner. We're talking specifically about Bitcoin. We both have a dark mode white paper in the background. I just realized that. That's awesome. But it's basically the unlock here is the fact that every single time there has been some sort of regulatory hurdle that's been cleared for Bitcoin in the United States, we've seen a monster rally. Now, of course, the prior three regulatory hurdles that we cleared, namely the ETFs being approved in August of 2023 prior to their launch in January of 2024, that was massive, right? Once it got approved, then they finally launched. It was off to the races. That was a massive boon for Bitcoin. The second one, of course, was Trump's election. Obviously, he promised to be the Bitcoin president, the crypto president, as it were, quote unquote. At the time, we didn't think that it would involve doing pump and dump meme coins, but here we are. That's how it's turned out. But at the time, it was a massive unlock for BTC. The fact that there would be a pro-Bitcoin administration and explicitly pro-Bitcoin administration going into the White House, right? So that was a huge unlock for Bitcoin. Bitcoin obviously went 6.5% the day he was elected. Then, inevitably over the course of that little run, it went from $74,000 to $109,000. That was number two. And then number three, was the Genius Act. So the Genius Act sort of it was passed into law after the majority of the bull run had taken place. It was about $110,000 when the Genius Act had passed, but nevertheless, over the following few months, from July to October, Bitcoin advanced from 110 all the way up to 126. So the reality is, every single time something favorable for BTC has happened within the United States, regulatory unlocks, I have called them, Bitcoin has advanced higher. One key caveat, of course, is the fact that those were during a bear market or a bull market. We are still in a bear market, and we'll talk about sort of the delineation between the two and where I think we are right now in the show as well. But the fact of the matter is, with the Clarity Act passing, that is the fourth major regulatory unlock for Bitcoin in the last 3 years. And chances are it's going to be massive for Bitcoin's price. Reason I say it, it's very important that there are clear regulatory guidelines for operating in the space before RIAs begin actively recommending it to their clients, before most wealth managers begin actively recommending it to their clients and just positioning portfolios around it because they have the discretion to do so, before most pensions, not just in the United States, but globally, pensions, endowments, other major funds start buying the asset, right? We've already seen some of this stuff happen at the margin. Of course, Fidelity has been in Bitcoin for a very long time, so they've been actively recommending it. But we're only just now seeing Bank of America and others begin to recommend actively that investors start allocating to this at the margin. And the Clarity Act will only boost that even further. And so we're talking trillions of dollars of capital that's largely been sidelined from the space, potentially looking to allocate here over the next several months. Now that Clarity has sort of passed the first test, right? Of course, there's a timeline to this. The Banking Committee is just the first and arguably easiest test to pass. It was able to make it through committee. Now it goes to a cloture vote in the Senate before it goes to the Agriculture Committee to review their markup and reconcile the two, and then I think one other committee before going for a final vote. So there's still a lot of hurdles to jump through, and my very own state's Elizabeth Warren, the apple of my eye, has issued 40 amendments to the Clarity Act because she hates Americans and she hates you. And she loves the big banks because somehow, some way, she's worth $12 million on a $174,000 salary, which would mean that she would have to have worked that salary without being taxed, never spent a dime for 70 years in order to be worth that much money, but she's only 68 years old. So, and of course she hasn't been working since zero, so that doesn't line up. But anyway, she is going to try to stonewall this thing into oblivion. And, hopefully when she tries to filibuster this thing, she gets tired and falls asleep or something because she's an old lady. But that's sort of the biggest test that remains in front of Clarity. But, once it does get passed, and I'm saying once because I'm very optimistic about this thing, especially in its current state, it's going to land on Trump's desk ideally by July 4th. That's the timetable that the pundits are talking about, that the White House crypto executive director is talking about himself. So we could be looking at a July timeframe for passage. And so similar to when the Bitcoin ETFs were launched, I would be watching out for Bitcoin to obviously clear these key hurdles that are still ahead of us, like the 200-day moving average. We're butting right up against it right now, and then do very well in the lead up to July 4th, especially as it clears these hurdles, right? Because similar to the Bitcoin ETFs, we had a lot of folks trying to front run the launch of those in January 6th of 2024. So I would imagine it would probably be the same as passage approaches and as the likelihood of passage increases leading into July 4th. But time will tell. We'll have to wait and see.
Yeah, absolutely. And so the Clarity Act has really been focused on stablecoins a lot. Like stablecoin yield was the big hung up for the banks and the senators to try to come together and clear out. But where does Bitcoin really fit into all this, right? What kind of clarification does Clarity give Bitcoin that it didn't have from, say, the ETF approval?
For sure. So a couple of things. The big one is illicit finance / AML provisions, meaning so it didn't have that previously. Like there were no necessary, like obviously US-based Bitcoin and crypto institutions, they sought out these licenses on their own just to be in good standing, but they're not legally required. And so now brokers, dealers, exchanges, they now have new rules that they need to comply with. Also in the Clarity Act, there are anti-CBDC provisions, which is quite nice. And the other major one is that it delineates what falls under SEC's jurisdiction and what falls under the CFTC's jurisdiction rather. So there is basically like what's called digital assets and digital commodities, and the commodities will go under the CFTC's jurisdiction, and the potential securities will go under the SEC's jurisdiction. And so one of the things that's really neat is the Clarity Act outlines what it considers a security versus a commodity with what it's calling the mature blockchain test. Now, I'm not exactly sure what that test entails. However, what it tells me, if we're being intellectually honest here, Rob, the only asset that actually passes muster to be a commodity, to be classified as such, is Bitcoin. It's the only asset that is completely decentralized, doesn't have an ownership structure, doesn't have one entity that issued it and controls its monetary policy still today. And of course, its hash rate is distributed and its monetary policy is constructed in such a way that it can't be toyed with, right? Unless, every node were to shut off right now, every miner were to shut off right now, and then one guy was running a node. He could change the rules, right? But because that is impossible, Bitcoin is sort of free from that. And so it acts mostly like a commodity in that sense. There's a free and open market for people to mine it proverbially, just like there is for gold, oil, other precious metals, other major commodities. So in my mind, that's the biggest unlock for BTC, because once all of these other things are classified as securities, but Bitcoin is the only thing classified as commodity, a commodity, guess what that does to its price action, right? At the margin, I believe people begin treating it that way. You've already seen Bitcoin sort of outperform during the last 7 or 8 major crises, the 60 days following the onset of the crisis. So it's already beginning to be a relatively uncorrelated asset at the margin. But once it's classified as a commodity, in my mind, all bets are off, right? And we know for certain that it's the only asset that will be classified as a commodity. So that's sort of a major development for me, because it means we're one step closer to Bitcoin finally shaking its correlations with the rest of the risk bucket and becoming a truly uncorrelated safe haven asset that you want to own in good times and bad.
Yeah, it's funny. I saw something on X that said that all the digital assets that already have their own ETFs, this includes Litecoin and Dogecoin, they might be considered commodities under this. Yeah, right. We got to take a lot of garbage with these laws, but it does help Bitcoin. And you were mentioning before that it helps give cover to RIAs to advise their clients to invest into Bitcoin. So how much money is sitting on the sidelines, and why weren't ETFs enough cover for these RIAs to have their clients invest into Bitcoin?
Right. That's a really, really good question. In my mind, like, there are ETFs for a bunch of stuff, and I think you answered your own question almost there. There's an ETF for Dogecoin, there's an ETF for Ethereum, all this other stuff, but you don't see Bank of America publishing their official Dogecoin allocation recommendation, right? So even though the ETF has existed, it doesn't necessarily create the same legitimacy as if as it would there be a legal framework for it. So it's sort of that in my mind, right? Like, there are ETFs for triple levered MicroStrategy, but you don't see financial advisors really recommending that. But the delineation between a security and a commodity, I think is what's going to be a major unlock that actually drives RIAs to begin recommending this. Whereas with the ETFs launching in and of themselves, they may have been a little bit more hesitant. Obviously, that's largely conjecture, but we'll have to wait and see.
And you also brought up the idea of sovereign competition. Once the Clarity Act is through, it puts Bitcoin on a whole nother level recognized by the US government. And this could push countries like China and Russia to dive further in before they get left behind. What is the state of sovereign competition in Bitcoin in your mind?
Yeah, for sure. I mean, right now it's sort of interesting because the US is in a place where our yields are spiking crazily out of control. So people are selling treasuries. It's strengthening the dollar. A strong dollar is not good for global trade. And of course, we have the issue in Iran where the US dollar is proving to be extremely valuable and an extremely important geopolitical pawn. And yet again, we have weaponized it. This comes after, of course, we weaponized the dollar against Russia. And previously, prior to that, China had begun dumping US treasuries because they viewed it as weaponized as well. And so the rest of the world is trying, keyword trying, to move away from the US dollar. They can't and they won't entirely for many reasons in my mind, because we're such a key global player in the global economy. That said, they're trying to. And so what they're going to find, like these BRICS countries, people are talking about BRICS. It's been over the news since like 2021. Everyone has said, tomorrow is when they'll launch the gold-backed currency. It's just so annoying. There will never be a gold-backed currency. There just won't be. You're not going to bundle up your currencies and then back it with a big gold reserve. Do you want to know why? Because it's unbelievably difficult to settle international trade at a high frequency in an asset that weighs more than nothing. Right? If your asset that you are backing global trade with, right, is extremely difficult to transport, you can't settle with it, right? And so ultimately, like, you want a hard asset. Absolutely. You want a hard asset to back your currency. in an ideal world. There are multiple reasons that that really can't work from a fiscal perspective, but let's just assume that the hard currency is what they're going for. You want the monetary hardness, but you also need the asset to be as saleable and as high frequency as the trading that you're doing, right? So you basically need the saleability to match the frequency. Saleability across space, that is, the ability to move it and transport it. With gold, it's like near impossible, right? You want to talk about moving $1 million worth of gold? It's very heavy, right? One person could probably do it if they were like an Olympian weightlifter, but like, 10 million, right? Not to mention, obviously we've got machinery, sure, but the time it would take, right, in order to actually transport gold. And so basically what I'm getting at is they need a hard asset in order to back this currency that they're trying to develop to move away from the dollar with, but it can't be gold. What's it going to be? It's going to be Bitcoin, right? Because it has all the monetary properties of gold with a couple of tweaks that make it a little bit better here and there. But it's entirely digital, which is perfect for a globalized world where there is high frequency, high volume trading. Now, that's sort of the state of play for these other countries. What happens as the United States passes the Clarity Act, more institutions get involved. What does it force the hand for? What does it force these other countries to do at the margin, right? We're just talking about geopolitical game theory here. Well, if we're to believe that the fiscal situation is so dire here in the United States, that bonds are selling off to a massive degree, the 10-year yield is the highest it has been since 2007. So we're having an issue. But we're also the world's most globally liquid sovereign debt market. So what does that say about the other countries' fiscal issues? They are awful. They are much worse than ours. And so their need for a hard asset is much larger than ours. I'm not just talking about at the citizenry level. I'm talking about the level of the institutions within the country itself, governmental and non-governmental. And so the need for Bitcoin in those other countries is much higher. Now imagine their reaction when they see the US passing a best-in-class legislative bill that drives capital out of those nations and into the United States. It really well and truly kicks off this sort of global arms race for Bitcoin. So now we have it from a legal perspective with the Clarity Act, God willing, it passes, and we see a lot of inflows, not just within the country, people allocating capital to Bitcoin itself, but people from outside the country who are already in Bitcoin and stablecoins moving here because we have a superior legal framework. So that's sort of the first rung of the Bitcoin geopolitical arms race. The second rung of the Bitcoin geopolitical arms race is what I talked about a moment ago, which is that, they're trying to develop a hard asset-backed currency. In my mind, they're going to find that gold serves that function terribly, but Bitcoin can serve it quite well. And so there's going to be a race from those nations to accumulate Bitcoin. What do you think that's going to do to the United States as well? We just passed the Clarity Act. We're not going to get one-upped by China or Russia, right? And not to mention, young voters are increasingly important to either party, right? For some reason, Elizabeth Warren still seems to think that young voters don't care about Bitcoin. They do. It's one of the major things that they care about. But regardless, Bitcoin is of immense geopolitical importance from a voting perspective. When we're thinking about incentives for career politicians, all they really care about is votes. And so it drives all the more reason for them to begin competing with these other nations who are now accumulating Bitcoin, right? And so well and truly, like it's sort of a geopolitical arms race to accumulate Bitcoin and foster Bitcoin, a good environment to be a Bitcoin holder and a Bitcoin business on both of those fronts. And so that's sort of the bigger picture here. If we zoom out from just the Clarity Act to look at sort of this war that's happening in the background, that's how I'm parsing all of this and reading the tape.
And it seems as if Clarity will take us one step closer to the strategic Bitcoin reserve, hopefully getting codified into law in some way. There is Senator Loomis's Bitcoin Act. However, she will be retiring at the end of her term in the next year or so. So Nick Begich from Alaska, he has just proposed a new act, I hear today, called the ARMA Act, which will codify the strategic Bitcoin reserve. How important is the SBR in your mind to this whole entire geopolitical game theory? And why haven't we gotten an audit yet?
For sure. Not super important in my mind. Like a lot of people are throwing a lot of weight into it. I think the United States government creating a sound environment for Bitcoin to be held and developed is more important than the US government buying Bitcoin themselves. Why is that? Well, because they're already fostering an environment from a monetary perspective that drives Bitcoin to the moon, regardless of what they buy, right? They're expanding the balance sheet. They're printing money out of thin air, out of necessity. So they're already driving the Bitcoin price up by virtue of fiscal necessity. So it really doesn't matter if they buy it or not, because that excess capital is going to find its way into Bitcoin one way or another. In my mind, if the United States buys a lot of Bitcoin, maybe too much Bitcoin at the individual level, it could sort of raise the concerns that like 80IQ retail investors and CoffeeZilla have had about MicroStrategy buying a ton of Bitcoin, which is that, oh no, there's centralization risk, because they don't understand that ownership of the asset does not give you control of the network. So if anything, like there might be some near-term difficulty if the U.S. does establish an SBR and buy a lot of Bitcoin. And but the main point is that to me, it's sort of a moot point as to whether or not the U.S. buys Bitcoin or not, because they're already printing a lot of money. That's why Bitcoin exists in the first place. So it'll just go up by virtue of the money printing and that excess monetary capital trying to find a home. And more broadly, other countries are doing it and they'll continue doing it.
I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video.
And also, if you think about it this way, like, the US dollar is still the king on the pile of garbage. It is still the king of fiat. And so really the necessity for the US to move to establish a strategic Bitcoin reserve is much lower than the countries that I mentioned a moment ago that are in a much more dire fiscal situation. Like obviously you have third world countries, you could use this quite a lot. You have Venezuela, Argentina, not necessarily third world. You've got El Salvador, who's already established their own Bitcoin reserve. And then you've got the countries out in the East that are somewhat developed, relatively first world, but not nearly as first world as us. You can call them second world. You've got Russia, you've got China, etc. The necessity for them is far higher than it is for us to establish an SBR, right? They want to break away from US dollar denominated trade and they want to have a hard asset backing it. Bitcoin is the thing that can fulfill those two roles. I think if we don't establish one, they are definitely going to establish one. And then I don't think the need for an SBR at the US level really arises, at least for the next 5 to 10 years. I think if we establish one with the Bitcoin Act, that would be awesome. And we'd definitely be early to the need for it, I think. But, in my mind, Bitcoin is going to go up regardless of whether or not the US pumps our bags, because they are pumping our bags already, right? By printing a ton of money. So.
Yeah, and another big proponent of the Clarity Act has been Scott Bessent. He says that this needs to go through. And one of the big reasons he says so is because he wants to maintain, of course, dollar hegemony. And this Clarity Act will allow stablecoins, dollar stablecoins, more importantly, to be spread around the world and have people outside of America essentially buy treasury debt by using these stablecoins. So explain that thesis and how important is it to America's future?
For sure. It's a really cool flywheel effect where you've got stable coins, which are the biggest on-ramp for Bitcoin, bar none, as far as a currency that people use to buy BTC. But stablecoins are also one of the biggest holders of U.S. treasuries, right? They are increasing their U.S. treasury holdings at a rate that has eclipsed every other country that's accumulating U.S. sovereign debt. So they're of extreme geopolitical importance for the United States. The U.S. needs stablecoins to continue buying treasuries in order to remain solvent, right? Very, very, very important that they do that. And so it's in the U.S.'s best interest to foster an environment where stablecoins can thrive. And there is clear legislation around them so they can thrive and expand. So if and when stablecoins do expand, they buy more treasuries in order to back their US dollar tokens 1-to-1. And then guess what? I just mentioned the first step in this daisy chain. Well, daisy chain actually is something that talks about a collapse. So I suppose flywheel is a better way of talking about it, is that stablecoins are the biggest on-ramp for BTC. So it's sort of this neat flywheel where by virtue of the US needing a marginal buyer for its debt, they are going to create a wonderful environment for stablecoins to operate. Stablecoins issue more of themselves. They buy US treasuries. And then as they issue more of themselves, as they inflate their US dollar supply in order to maintain their peg with the actual dollar, they're buying more treasuries. And a lot of that liquidity, most of it, is flooding back to Bitcoin because it is the single biggest on-ramp for BTC. So it's this really cool flywheel where in a way, the United States' drive to maintain US dollar dominance is also creating a massive on-ramp, a self-reinforcing feedback loop where liquidity drives itself into Bitcoin. So yeah, no, it's quite cool. It's funny, like it all comes back to Bitcoin, which is really neat, right? Because ultimately, stablecoins are extremely useful. They're extremely useful in a digital world. I think it'll be the primary way in which people interface with the US dollar in the next 5, 10, 15 years. But at the same time, like they are the biggest on-ramp for BTC. So positive developments from the Clarity Act. Obviously, there are some that relate to Bitcoin, but in a way, the most important one long-term is the fact that this creates this, or like codifies almost this self-reinforcing feedback loop where stablecoins get issued, capital flows into treasuries, that stablecoin liquidity finds its way into Bitcoin, and then the loop begins again.
All right, well, now let's jump into where we are in the Bitcoin market. In the intro, you said that we are not in a bull market yet. We're sort of in this weird purgatory, right? 81,000 at the time of recording, right below the sort of line of where the ETFs averaged in, of course, and short-term holder cost. Explain to us, what is your market feeling right now? Does it feel as if we're about to jump off, or could there be another leg down before the bull really starts running?
For sure, yeah. So it's interesting, right? We are very close, in my mind, to officially kicking off a bull market. A bull market has really never began underneath the 200-day moving average. There's an expression for Bitcoin: nothing good happens under the 200-day moving average. Obviously, Bitcoin has historically moved in 4-year cycles. So if we were to believe that, above this 4-year framework for Bitcoin, there's great price action, below it there's poor price action, it's a pretty good framework to operate under, and historically it has checked out. So right now the 200-day moving average is at about $83,500. Right now, Bitcoin is about $2,100 underneath it. So it's very important for Bitcoin to break that level and close above it. Obviously, as the days go by, the 200-day moving average declines. So in a couple of weeks, it's going to be lower than Bitcoin is now. But regardless, it's very important for Bitcoin to break above that level and hold it for a bull market officially to really be kicked off, in my mind. That's sort of the last line in the sand as far as the delineation between a bull and bear is concerned. We've already broken above 2 very key levels. The first one being the short-term holder cost basis, which is the average price of Bitcoin purchased by those who have held Bitcoin for 155 days or less. This has historically been a major demarcation zone between bull and bear markets. We broke above it. We've held above it for quite some time. We dipped briefly underneath it yesterday and earlier today. But of course, now that the S&P 500 is making new highs, now that the Clarity Act is passed, Bitcoin is going well again. The second zone that we have breached / we're about to breach is the ETF cost basis, which is right around where we are right now. That $82,000 to $83,000 zone. So Bitcoin has managed to break above it and hold it, but it's still sort of hovering around it. This is obviously a really, really key zone because particularly for ETF holders, they like to defend their cost basis, and they tend to be much more diamond-handed than the standard short-term Bitcoin holders who are trading in and out, right? And also because the ETF buyers are a much larger component of the market. As far as market composition and market structure is concerned, they make up a much larger percentage of it than they ever have before. It is very basically any other sort of cohort in the market. It's very important that we break back above their cost basis so they can begin averaging it again, right? And like you can imagine, even though ETF holders are diamond-handed, chances are there are some of them who have limit orders set, right? So that's probably keeping Bitcoin down quite a bit. But once we're past that, we close above it. Once the 200-day moving average is cleared, then that would tell me, chances are, probabilistically, we are in a bull market. So that's kind of the line in the sand, and there's a battle being fought right now in order to reclaim that level. We've already attempted breaking above it twice, and unfortunately failed both times. Where it seems today we are going to try for a third. If we fail that, in my mind, the likelihood is that we probably go down, which would really suck. We would revisit the lows, I think, which would really suck. Would we see new lows? Honestly, who knows? It depends on how this summer plays out, right? It's sort of interesting because On the one hand, you have stocks making all-time highs, Bitcoin on the line in the sand, ready to rip higher into a new bull market. But on the other hand, we've got this massive macro crisis where price inflation is the highest that it's been in 3 years. Producer price inflation is the highest that it's been in 3 years. The M2 money supply growth is growing at its fastest clip since 2020. And at the same time, the reason for all of this is because over in Iran, the Strait of Hormuz, which supplies 20% of the world's oil, has almost been closed for 3 months. And it has a really outsized price impact, obviously, because oil is downstream of not just fuel, but basically every product in the modern world. But also, even though it's only 20% of the world's oil, it doesn't translate to just a 20% increase in prices. The oil that we import from Iran is significantly cheaper than the oil that we export from the United States. So as a result of that, even though it's just 20% of the world's oil supply being shut off, it has a 50, 75%, 100, 150% impact on price. And you've seen that. I'm about to, potentially go fill up gas for $5 a gallon. It was $2.30 a couple of months ago. That's more than double, right? Because of the outsized price impact that Iranian oil has when we no longer have it relative to oil from the rest of the world. So not to get too off topic, I know we're going to talk about that, but that's basically what Bitcoin is facing right now. So it's going to be a volatile summer, Rob. I'll put it that way. Either it's a volatile summer in a really good way, and we see the price go up, or it's a volatile summer in a really bad way, or a really good way if you're sitting on a lot of dry powder. And these inflation fears turn into recession fears, turn into actual recession, turns into everyone selling every asset they own, including Bitcoin. And in that case, it would probably be yet another generational buying opportunity.
It does feel as if the tailwinds and the headwinds, they're both massive and they're banging up against each other right now, and it's hard to tell which way it will go. I agree with the 200-week moving average. In 2014, 18, and 22, we banged our head up against it, I think twice in each one of those bear markets, and then went down lower. So I would not be surprised if we go back into the 60s. I don't love to say it, but it does seem as if it could be a real possibility. But one thing that has really helped this market stay afloat over the last couple months has been these new preferred shares from MSTR and from Strive, right? We've got Stretch and SATA gobbling up lots and lots of Bitcoin, especially Stretch. What is your take on Stretch, and how important is it for Bitcoin moving forward?
It's a great question. I got the Sailor follow a couple weeks ago, so I'm very happy about that. Finally, nice. Only multiple years of posting Bitcoin content to get it, but that was cool. Stretch is really interesting because on the one hand, you've got all of these Ponzi scheme callers like CoffeeZilla, who has PTSD from Terra Luna and all of the crypto crashes of yore. So I don't blame him for calling Stretch a Ponzi scheme, but he's wrong. And then on the other hand, you have people who are saying this is going to eliminate all Bitcoin bear markets because in the dash for cash, people are going to buy STRC. Number one, the Ponzi scheme enjoyers, the ones who are saying that this is a Ponzi scheme, are very wrong, right? Number one, I think Jeff Walton put this really, really well. He sort of likened STRC to insurance. The fact that most of the dividend is covered by new issuance of STRC is just the same as insurance contracts, right? It's not a Ponzi scheme, right? Because insurance companies, they have a massive balance sheet, but they're not selling the assets in the balance sheet in order to pay out claims. They are using the proceeds from new payments from policyholders in order to pay out new claims. In the same way, STRC has a strategy is a fortress of a balance sheet, but it's not using that balance sheet in order to pay out STRC dividends. It is using proceeds from new STRC purchases in order to fund, and the ATM program in order to fund the dividend, right? So it's like an insurance company, not a Ponzi scheme. Ponzi schemes don't have any assets at all, right? It's Fugazi, man behind the curtain, Wizard of Oz type stuff, where it's literally smoke and mirrors. There's nothing behind it. And so STRC, I believe, is fundamentally different. And look, the big story with STRC, obviously it's had record-setting days, days where they're buying several thousand Bitcoin in a single day, which is many, many multiples of the daily issuance. So it's a major component of why Bitcoin has managed to move off the lows in my mind. I think the big story with STRC is the fact that what I've said is that it's transmuting Bitcoin's properties into a fixed income product that attracts capital from a much larger market. than the current market for BTC, right? If you think about it, Bitcoin currently trades like a tech stock. You and I both know it's not a tech stock. It has the monetary properties to be the least correlated asset in existence, not correlated to anything. It does well during risk-on environments. It does well during risk-off environments, but it doesn't trade that way. It trades with the software bucket. However, there is a massive pool of capital out there in the ether, anywhere from $200 to $300 trillion worth of capital that is allocated to fixed income, whether it's because they're older retirees, whether it's because they're pension funds, whether it is because they're insurance companies, whether it's because you are just a trading desk that has a mandate to hold fixed income, you are holding fixed income. It's larger than the global equity market. It's much larger than the global commodity market. And effectively what Saylor has done is he's taken this asset with which on a 4-year smooth basis has never had a compound annual growth rate below 29%. And he's saying, hey, look, I can give you about 35% of this in a fixed income product. How does that sound, right? You give me the proceeds to buy this asset. In return, I'll give you 11.5%, which is underwritten by an asset that is consistently done basically 30% a year, no lower than that for its whole life. How does that sound, right? Sounds like a bargain, particularly when you consider that right now, the 30-year US Treasury yield is only offering 5%, right? Granted, it's very high. It's very high to historically where we have been. But even still, it doesn't even come close to what STRC can offer. Stretch is offering junk bond-esque yields, but with an investment-grade balance sheet, right? They have 59 years of dividend coverage, even if Bitcoin didn't move at all, right, on their balance sheet, and they were forced to sell BTC in order to make up the dividend. And so ultimately, like Bitcoin would need, and another crazy stat is that Bitcoin would only need to rise 2% a year in perpetuity in order for Strategy to pay the Stretch dividend without issue, or all dividends on its balance sheet without issue in perpetuity. And so ultimately they've made it so that fixed income capital, this $300 trillion global market, can port into an asset that is only $1.6 trillion, right? And so as the years go by and inflation becomes more of a hot button issue and the US government continues to offer higher and higher and higher yields, but it's not as enticing because of the increasing credit risk of the US government and how hot inflation is running, STRC is going to look even more attractive. And so in my mind, it's immaculate financial engineering. It's a great product. It's not for me because I'm 25. I'm in the high growth era of my life. There's no reason for me to park my capital in STRC. Maybe if I had a $10 million exit tomorrow, I would take $1 million or $2 million and throw that into STRC just for kicks. But at this point in time, I'm more concerned about capital growth, not capital preservation. But it's phenomenal for the cohort of the world, much larger than me, that is interested in capital preservation. The other component with STRC, to your original question, I just kind of wanted to set the stage there, is how is it going to perform in a bear market? Is it going to dampen some of the downside during a bear market? We'll have to wait and see. Mechanically, it makes sense. Mechanically, it makes sense that a fixed income product would be what people flee toward during a bear market. That's historically what happens. You flee from equities, you go into bonds. But unfortunately, typically you flow into government bonds during a recession, not corporate bonds. And even though STRC isn't a bond, functionally the way that it trades, I wouldn't imagine it's too different from a corporate bond. I think that's the way that the market is going to trade it during de-risking periods. Will it make it such that the bear market has less of an impact on Bitcoin? I believe so. I think it will dampen that impact. But number one, it remains to be seen. Number two, it's very hard to quantify. Number three, and most importantly, in the event that we get a correlation to one event where something happens, I know it's vague, but something happens like March 2020, let's say the hantavirus explodes in the United States. All of a sudden, markets sell off by 50%, Bitcoin's down 75%. I don't think STRC will be where people flee. I think they will flee to cash and they'll go to the store and buy bread and toilet paper and guns like they did in 2020. So I think during a bear market, it will have a dampening effect on the magnitude of the drawdown, but we'll have to wait and see. But during a correlation to one event, everything gets sold, including Bitcoin, including gold, including literally everything. All people want is cash. So in that first environment, I think it does well and it dampens the magnitude of the bull market, but time will tell. We'll see what happens.
Yeah, and when it comes to STRC, I completely agree that the calls of it for being a Ponzi are completely unfounded. And one reason for that is because Michael Saylor can print as much common shares as he wants to pay the dividend for STRC, is so that there really is no need to even think about touching the Bitcoin because he can just print the ATM and make sure that there is coverage in that regard. The one thing that does raise my eyebrows, though, about it are the DeFi protocols being built on top of STRC. We are seeing coins with promising an APY of 50 to 60%. And we know that the chase for yield has caused some of the biggest, of course, collapses in this space. So have you looked into these DeFi tokens that are being built on top of Stretch, and what do you think about it?
I haven't, but I don't like the sound of it at all. I know of a couple of DeFi tokens, namely Buck token. I know that wound down. It was actually the way you do a DeFi token on STRC. Number one, it's only enticing for people who live outside of the US and don't have access to actually buying the perpetual preferred stock in a brokerage account. That's it. That's who it's advisable for. But the only way to do it properly is to offer a lower yield than STRC. Right? That's how it should work, because if you're offering any higher, then you are playing games with leverage. And obviously when price is volatile, let's say we had a 10% Bitcoin sell off today, if STRC depegged massively, if STRC depegged all the way down to like $75, for example, then that would probably cause a lot of these protocols that are offering 30, 40, 50, 60% leverage STRC yield to explode. And then all of a sudden your money is no longer. So that wouldn't be ideal. It's almost like, obviously this is different from Terra Luna. STRC is fundamentally different and the comparison is so silly. However, the idea of an algorithmic stablecoin, and all of a sudden in the event of a massive sell-off, the underlying becoming worthless, that could be what happens to these STRC tokens that are offering crazy yield in the event that a massive Bitcoin sell-off occurs. So anyone watching this, I would be extremely wary of those, right? If you're not happy with 11.5% dividends, right? Return on capital dividends, I would say buy Bitcoin. And if you're not happy with Bitcoin's 30% CAGR over 4 years, I would say put down the phone and stop becoming a dopamine hound, because if 30% a year isn't enough for you, you've got some soul searching to do. That's what I would say.
And then the other big news in the preferred space is that just today, Strive announced that SATA comes out with a daily dividend. How does that change the game?
Yeah, that's really cool. I mean, kudos to the whole team over there, Matt, Ben, Jeff, Joe, all of them. That's really cool. I think it's cool. And it makes it so there's more optionality, if anything, right? It was interesting. Stretch sort of was the first mover in bi-monthly dividends a couple of weeks ago when they announced that they'd be doing that. That obviously doubles up the ex-dividend date and makes it so that the likelihood that it trades near par or the time that it trades near par will increase, which is really good because obviously that makes it so a strategy can accumulate more Bitcoin using the Stretch ATM. And so for SATA, that's basically the exact same dynamic that I believe is going to play out, but on a higher frequency. So ideally, this drives SATA to trade at and above par more often so they can hit the ATM more often and purchase more BTC more often. It's just really amazing that we've got some of the brightest minds in structured finance working for Bitcoin companies, specifically trying to engineer new methods of siphoning different capital markets into BTC. It's amazing to see. And, I think SATA, in that sense, becomes a great option for someone who might be looking to get that kind of income, right? If you think about it this way, let's say you are in real estate. You've got a portfolio of rental properties, but you have, it's really difficult for 3 out of your 10 tenants to pay on time. And it's unreliable and you've got kids and you've got bills to pay. What if you just sold those 3 rentals specifically? Not your other ones because they're reliable, they're cash flowing, whatever, but sold those 3 rentals specifically with the unreliable tenants in worse areas, and you purchase SATA with it. All of a sudden, you've got daily reliable income. Not only that, but you have a liquid market to sell into. Let's say you try this for a month, you don't like it, the payouts are cool, but you want to sell it. You've got a liquid market to sell into. That is a phenomenal option for folks who are looking for higher frequency income, again, with a conservative yield relative to Bitcoin, but a crazy yield relative to what you can get anywhere else. Even with those rentals, he would be in this example, he would be getting probably 3 or 4, maybe even 5 times his cap rate on all of those rentals. If we're talking about a 2 or 3, maybe 4% cap rate on a very, very good property, SATA's offering what, 13%, 13.5%. So, it's sort of night and day, and it offers a really cool option for those who wanna begin seeing the fruits of that income very early, but also they have the optionality similar with STRC to sell at any point in time because it's a very liquid market. So I think this is going to drive a lot of demand. In doing so, it's going to drive a lot of activity above par, and that's going to drive a lot of incremental demand for BTC.
So these things are very bullish for Bitcoin, but one thing you mentioned before, of course, is this oil shock. And we need to dive into it because you made a great video explaining it all, that there's lots of different implications that come from the fact that we are short 12 million barrels of oil a day. I mean, now it's over 1 billion barrels of oil short since the beginning of this conflict. Why do you think markets haven't reacted in the way that you think they would in this case?
Yeah, so it's a really good question. You know, it could be any number of things. I think it's just optimism. What I said in the show and what I broke down, I went on Bitcoin Archive's show, and that was uploaded today. I basically said that it's just optimism. Think of it this way. All markets are forward discounting mechanisms. So they are trying to discount future events into the present. Basically, they're trying to price things in. I know it's a meme. We always say like, oh, it's already priced in, but that's what markets do. They try to price things in. And so when the S&P 500 hit $7,500, despite the Strait of Hormuz being closed for 3 months, the price of oil being above $100 for most of that time, and massive inflation prints in the United States, it's telling you that they believe this is going to end soon, right? So one of these things is very wrong. Right? Either the war being over soon is very wrong and the S&P 500 tanks, or those who are betting the war rages on are very wrong and the S&P 500 has it correct. Basically, what it boils down to in both scenarios is, will the war last? Because if it does, we know with certainty the impact on oil's price that it will have. The Strait of Hormuz remaining closed, exporting 20% of the world's oil at an order of magnitude cheaper than Western nations dredging up oil. If it remains closed, that continues to have an outsized impact on oil. It remains above 100. We go to 120, 130, 150, $200. If this rages on into June, we're going to see $200 Brent crude oil, which is nuts. The reason I say so, not only because of what I just explained a moment ago, but also you have to consider during times like this. Think back to 2022. The United States Strategic Petroleum Reserve was being drained in order to offset the price increases of oil, right? It was absolutely notorious. We invaded Ukraine. Joe Biden was pooping himself probably. And then, he signed some order, he pressed a button or whatever. And then, the SPR was drained. It had an massive outsized impact on oil's price. It dampened the price somewhat, but it was still very elevated. $5 gasoline sucks, Rob, but you know what's worse than $5 gasoline? $7 gasoline, right? $8 gasoline, $9 gasoline. That's what we're staring down the barrel of in the event that the U.S. Strategic Petroleum Reserve drops to a critical level where we have to stop draining it. And as the days go by, the date for that is about mid-June, most people are saying. So mid-June, if we keep draining the petroleum reserve like we are now, we are going to run out very soon, within a month. And also, global oil reserves will reach what's considered by Goldman Sachs a critical level. And at that level, they estimate oil will be $180 a barrel on average nationwide, not nationwide, globally. So if that happens, be prepared for very expensive bread. Be prepared for very expensive milk. Be prepared for very expensive everything. It's not just your fuel, right? It's also the fertilizer that goes into growing your crops. It's also the diesel that goes into powering the machines that fertilize the crops in order to grow them, right? So every downstream product from oil will have a massive upward repricing event if we can't get this thing sorted out by June. Now, here's why I think we will get it sorted out in advance of June. I mentioned the political incentives aligning in favor of this war ending sooner than later. It only makes sense. Think about it this way. So Trump was elected, and I voted for the guy, and I'm pretty disappointed with the fact that we are now in a new war because he ran on the platform of no new war, low prices, drill baby drill, and being the Bitcoin capital of the world. Right? We already touched on why I think the Clarity Act is going to pass because it's with basically nothing else going for him, the incumbents really need this heading into the midterms. But oil even more so. When you lose you've already lost no new wars. You started a new war. We didn't want that. But the only other thing you had, apart from asset prices, was disinflation. Right? Now you don't have that. You have 3.8% inflation. So policymakers need to move fast to open the Strait of Hormuz, end the war, if they want a chance at getting elected again in November. If they delay into June, chances are it's totally over for the Republicans in the midterms. We get President AOC in 2028, and we're all thrown in prison or something like that for holding Bitcoin. So that's basically the way that I view this. All of the incentives are aligning in order for the war to end sooner than later, because if it does not, chances are, and again, their salary and being a lifelong politician is all they care about. other than bombing Middle Eastern countries wantonly. And so that's why I think the war will wrap up sooner than later, in my mind. We'll have to wait and see how it shakes out. But also the other thing too is asset prices. They want to make it so inflation reverses, because really every 10 cents that the price at the pump increases leads to a 0.65% decline in the approval rating for the president and the current leaders in Congress. And so think about it this way. Every dollar that gasoline increases, and it's already increased $2 nationwide, or about $1.50 nationwide, leads to a 6.5% decline in approval. So the approval rating of Trump and the Republicans is already decreased by 10% or more, right? So if it increases again, another 10%, they're out. They're toast in November. So they need to get gas prices down, meaning they need to end the war in Iran sooner or later and open the Strait of Hormuz. And also, that's also why I'm so confident when Kevin Warsh gets in. I think he's getting sworn in either today or tomorrow, I'm not sure. He's going to cut rates regardless of this inflation, because this inflation already can't be solved by raising interest rates. You're just going to cause more demand destruction. This is oil inflation. It's not inflation as a result of runaway credit conditions. So I think he's going to cut rates, because the other lever they have to pull is asset prices. So ending the war in Iran, and then also juicing asset prices into the stratosphere. Right? Those are the only two levers they have left. Number one, for the young people who are already priced out of everything, prices falling in November would get you their vote. And then the boomer class who already has like a liquid $10 million net worth, making it so their asset prices go up even further gets you their vote. So those are the two final levers to pull. And so that's what I would be looking out for as far as macro is concerned over the next couple of months.
And as you just said, Kevin Warsh was just confirmed. We have a new Fed chair, Powell out, Warsh in. A lot of people are saying that he is a pro-Bitcoin Fed chair. Do you believe that? And what if he was, what would that mean?
For sure. Yeah, no, I absolutely do believe he's a pro-Bitcoin Fed chair. He has said that quantitative easing is stealing from the poor to give to the rich. It's one of the biggest policy mistakes that we've ever had in the U.S. But more importantly, he was doing an interview. I'm pretty sure he was at Stanford at the Hoover Institute being interviewed, and the interviewer scoffed at Bitcoin. When he said Bitcoin, he was wearing a bow tie. He was like, "Oh, Bitcoin, blah, blah, blah." And then Kevin Warsh stopped him, and he said, "The way you said Bitcoin was very derogatory, like you were scoffing at the idea of Bitcoin. The reality is that Bitcoin is gold for young people. It is a check on the Federal Reserve to make sure that people can protect themselves when our monetary policy is unsound. If it's going up, it means we're doing our job wrong." So like, number one, that tells me that this guy at the very least gets Bitcoin. He's also quoted Satoshi Nakamoto, believe it or not, or he quoted the Bitcoin white paper in a research report that he did a couple of years back. And so at the very least, he understands Bitcoin. As for whether or not he's pro-Bitcoin, for me is sort of a moot point. The Fed chair's job is to raise and lower interest rates. I don't think he's going in there, even if he does own Bitcoin and he understood it and was an advocate for it. I don't think he's going in there to cut rates and print a bunch of money just so Bitcoin can go up. But regardless, I think mathematically speaking, he's going to have to, right? He has sort of gone in and said that QE is reverse Robinhood. It's stealing from the rich to give to the poor. Sure, that's well established. He doesn't, or stealing from the poor to give to the rich. He doesn't like QE. He doesn't like printing money via balance sheet expansion. Whatever. Number one, we're already doing it. Okay, so we're already printing $40 billion a month to purchase U.S. Treasuries. And guess what? It's not enough. The U.S. 30-year yield is at a 19-year high. So we're not printing enough money to make sure that yields go down. So we're going to have to print some more. So regardless of whether or not Kevin Warsh wants QE, we're going to get it. And number two, and most importantly, it seems like he wants to use rates in order to dictate policy, but not the balance sheet. Sure, whatever. Even if that is the case, it's still going to have an outsized impact on asset prices. Well, why is that? He's already sort of laid out the justification for cutting rates, despite the fact that we have 3.8% inflation. He has said that, number one, the inflation reporting we have is inaccurate. Now, Rob, when you and I hear the inflation reporting is inaccurate, we say, of course it's inaccurate. It's much higher. Kevin Warsh thinks it's lower. He thinks that inflation is actually way lower than it is now, despite since 2020, food prices being up by double, et cetera, whatever. So that's justification to cut rates. If you believe that the real inflation rate is actually 1%, you're going to cut rates. Kevin Warsh believes that, right? So number one, he's justifying cutting rates by saying inflation is actually lower than it's reported. Number two, he's talked about the deflationary impact of AI. Now, I believe AI will be deflationary. I believe it'll also be the biggest productivity boom we have in the United States. We've had in the United States since the dawn of electricity. I honestly and truly believe that, even bigger than the internet itself. It's going to allow one man to do the output of an entire team of people. I certainly know that my productivity has 10x'd since integrating AI into my daily workflows. I'm sure you can say the same. And as a result of that, I do believe it's going to have a deflationary impact on prices. But he followed that statement up with saying it fundamentally changes the way we need to do our job at the Federal Reserve. What does that mean? What that means is in a credit-based economy, in a credit-based global economy, where you're targeting 2% inflation in order to make sure that people spend more money than they make, and they're spending money, so credit is being created, and as a result of credit being created, spending goes up. When you're living in that world, you cannot tolerate deflation. Why? Because it pushes people's time preferences out into the future. People stop spending money relentlessly, less credit gets created. That's why we have inflation targeting in the first place, which is so evil. So what he's saying is, because inflation is going to have, or AI is going to have a deflationary impact, it's going to push prices down. We need to cut rates much more aggressively and print even more money to offset that deflation and make sure prices still rise by 2% a year. So imagine the amount of money they will have to print in order to make that happen. So that's sort of why I think Kevin Warsh is great, just for all asset holders generally speaking, but Bitcoin in particular, as he gets sworn in, regardless of whether or not he's pro-Bitcoin and regardless of how impartial he claims to be. You and I both also know the reason that he was sworn in, because he will do Trump's bidding. Trump and Scott Bessent were literally saying, like, we're going to pick the guy who's going to cut interest rates, in so many words. And so Kevin Warsh, he talks like a hawk, but he's going to act like a dove, in my opinion. So time will tell, but I think he's going to be a great Fed chair for Bitcoin.
And it's so funny when you think about this policy, because they need to put their foot on the gas 100%, pedal to the metal to juice the system, while they're putting their foot completely on the brake of this deflationary force that is AI. And Saylor has come out and said, of course, human capital is being demonetized by AI. And as you get more productive, it means that the wages, human wages go down. Right? Like, that's the way it works. How do you see, you're 25, you're younger than I am. How are the people in their 20s taking to AI in this job market?
For sure. Yeah. I mean, it's like, so it honestly depends when you're young, but also when you're old, but more importantly, when you're very young, if you're high agency or not. If you're high agency, AI is like the best thing to ever happen to you. Rob, I don't know about you, but like I have ADHD. It's really bad. Like, if there's a video game in front of me, I can't help but play it because it's so addicting. The feedback loop is so addicting. But AI has made it so that, like, I'm gamifying everything I do. The feedback loop is now near instantaneous. And so rather than touching a video game, I would much rather do work for literally 12 hours a day. Because the feedback loops are now near instantaneous, for me as a high agency person, as a high energy individual who gets distracted very easily, this is like the printing press. This is like the biggest productivity revolution ever. I'm burning through tokens like they grow on trees. But if you're low age, and that goes for all high agency people, right? So like many, many, many multimillionaires will be created as a result of artificial intelligence. That said, if you are not high agency, if you are lazy, if you cannot hold yourself accountable, if you don't have control over your own outcomes, right? Or if you don't have control over your inputs, like if you fight with yourself daily, like, oh, I can't get out of bed, I can't do this, then you're going to lose and lose big. AI will replace you, right? So it's like, it's this huge bifurcation. Again, it's like the people who have agency can now get it faster and easier than ever before. They can get after it. But the people who don't have agency, it's kind of game over, right? That said, there will continue to be jobs for those who do not use artificial intelligence. New jobs will be created as a result of the rise of artificial intelligence. But the big unlock for me here is that with artificial intelligence, if you are high agency, it is much easier to achieve what you're seeking to achieve on a faster timeline than ever before. You can do the work of 5 people as a single man shop, right? We've seen, granted, it was a morally ambiguous GLP-1 company that was using fake doctors to advertise on Facebook. But because of AI, we have seen the first one-person, $1 billion company, not $1 billion valuation, $1 billion in revenue, right? One guy, technically 2 brothers, but one guy. So we're already seeing like one-person billion-dollar companies, and that sort of speaks to the impact that AI is going to have at the individual level. That's it. What's it going to do to the job market? Well, in my mind, I don't ascribe to the camp that there will be mass layoffs and people will need UBI in order to feed their kids. I don't think so. I think that just like every labor market cycle, I think there will be a culling. Right now, there is a culling. There are layoffs happening. I'd have friends who are saying, hey, layoffs happen at my company. So we are going through a bit of a labor market downturn right now. That said, I think on the other side of it, you're going to see a structural productivity boom. I can't remember the name of the paradox, but it basically says that like when a machine gets created that causes productivity to rise at the individual level, more jobs get created, not less, right? So think about it this way. When machines started showing up in car factories, did we produce fewer cars or more? We produced more cars, which necessitated more people to operate those machines. So even though people were replaced by machines, more people ended up being hired to operate those machines over time. And so that's the dynamic at play here with AI. There's going to be a bit of a recalibration period. I'm sure people will get fired, but the reality is productivity is going to 10x. People will be employed. You'll be able to do much more work than ever. It'll be more enjoyable than ever. We'll finally be able to have a work week that's close to what Europe has because we can log off before like 5 p.m. on a Friday. As a result of this stuff, and I think it's going to be, the biggest period of widespread prosperity in this country that we have had in our history. Right? I genuinely do believe that we're entering into this golden era. That said, so I think that's how it's going to impact the labor market, right? That said, to the Kevin Warsh point, they're going to print a crap ton of money in order to offset the gains to productivity. They don't want you happy. They don't want me happy. They don't want you owning anything that's worth anything. So they're going to print a crap ton of money on the other side of this thing. So I want to be an asset owner during the rise in AI.
And why is Bitcoin specifically well positioned to succeed in this age of abundance?
For sure. So I did a video on this one. Basically, it comes down to two different things. Number one, Bitcoin's monetary properties cannot be disrupted by AI in the same way that AI can disrupt software modes, for example. So a lot of the value that was created in the stock market strictly as a result of, like tribal knowledge for creating software is being eroded in real time. It's being destroyed. So Chegg is a perfect example. Chegg was a multi-billion-dollar company, $14 billion at its peak. I used it a lot to cheat during college. And at its peak, it was worth $14 billion. Now it's worth like $100 million. So like a 95% decline in its value because of ChatGPT, because of one company. And like we're talking about, 3 years, 4 years after ChatGPT 1.0 was released, right? Not that long to disrupt a cent-a-billion-dollar company. So how many more companies are going to be disrupted? So basically, the companies that can be disrupted by AI will. There will be huge value destruction, and the capital will have to flow elsewhere. So number one, Bitcoin cannot be disrupted by software. It cannot be disrupted by AI. And so capital that gets disrupted as a result of the disruptors are going to flow toward obviously the picks and shovels. So the NVIDIAs of the world, obviously to the AI software companies, so the Anthropics, the OpenAIs, the Metas of the world. So it's going to flee from the disrupted to the disruptors, but it's also going to flee into assets that cannot be disrupted, right? Like Bitcoin. Right? Its monetary properties can't be disrupted by AI, like gold, but Bitcoin will do better than gold at the margin, obviously because of its monetary properties. So that's the way in which Bitcoin benefits in an outsized way, number one. Number two is that I mentioned a moment ago the deflationary impact of AI, right? It's going to make us infinitely more productive. It's going to make things cost much, much less. But in an inflationary monetary system, in a credit-based economy, we need to print money. We need to maintain 2% price inflation at the very least in order for our measure of economic growth, GDP, which is largely spending, to continue going up 2% quarter over quarter. So as a result of that, we're going to see massive money printing, which means that scarce assets are going to do very well, right? Obviously, the picks and shovels, the disruptors are going to do quite well, but Bitcoin as an absolutely scarce asset tends to do extremely well in this environment. So both from the monetary response perspective and also from the undisruptibility, the non-disruptibility, there's got to be a better word for that, of Bitcoin and those software modes collapsing. That's sort of the reason in my mind, my thinking as to why Bitcoin is going to be sort of the asset to own for the AI era.
Joe, what a rip. We covered a lot of ground there, and I think that you gave us plenty to chew on. Thank you so much for that. If people want to find out more about you and all the great content and everything that you're making, where should they go?
For sure. Well, if you're watching this on YouTube, you can go into the top, just search Joe Consorti, the same way my name is spelled in the title. And if I'm a collaborator on this, I'm not sure if I am, you can just click the icons over here on this side of the screen. And then just click Joe Consorti, hit subscribe. You'll be able to get these breakdowns 3 times a week.
Amazing, man. Great work. Keep on doing what you're doing, and I'll be sure to invite you back on. This was awesome.
Thanks, Rob. Appreciate it, man.
Cheers. Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.